Alright folks, the indicator video. Finally hitting you with the indicator video. A lot of you have been asking in the comments, what indicators do I use? Why do I use them? How do I use them? So that is what we're going to discuss here. Now before we get diving in, keep in mind I've been using a lot of these indicators. The premium indicators that we have here, Simpler, I've been using a lot of them, years before I ever joined the team. And with that being said, being a part of the team over there for the last year, I'm spoiled in the sense that I get access to pretty much all of our indicators. So lucky me, I know. But I say this to say, basically having full access to the treasure chest over here, these are the ones that I like to use. These are the ones that, at least for my style of trading, I've found to be most important. So it's not so much a plug for, our indicators here. It's more so, hey, I've been using these before I joined the team, and now that I joined the team and can use anything, these are the ones that I still think are the most important, at least for my game plan. Now, a lot of you are already familiar with my trading. For those of you that aren't, generally speaking, I only trade one setup. Right? So I've made my entire game just like super specific. Trading one setup, and I'm looking for the same move on every trade. And the move I'm looking for is referred to as a bigger than expected move. I'm looking to catch a move from the 21 period EMA into about 2 average true range moves either above or below the 21. Right? So we'll talk a little bit more about that. But the indicators that I use, they're designed to put me in the best position possible to catch that move over and over again. Right? So I'm looking for that move into 2 ATR with consistency, frequency. I'm trying to do so while obtaining a good risk reward. Right? So the indicators I use, they're very much so focused on that. The same entry, the same exit, just kind of that repeatability factor. Right. Now the good news is a few of these here, they're free on any platform, or most platforms, right? Thinkorswim, Tastyworks, all the other ones out there. So a few of them are free, a few of them are the premium indicators. But in terms of the free stuff, I like my exponential moving averages. So I like to plot both the weekly and the daily 8 EMA and 21 EMA on my charts. So I'll show you how to do that, and I'll show you the importance of that. And then you got to have your Keltner channels. If you don't have your Kelts, you need a pair of Kelts. So I got 2 sets of Keltner channels on my charts, and they measure 1 average true range move and 2 ATR above and below the 21. And then the mother of it all, right? The big mama, the squeeze. Keep in mind the benefit of the Squeeze Pro is you can see different compressions. So there's a high compression squeeze, a low compression, a mid compression. I love it as a tool. For what it's worth, I don't really typically pay too much attention to the compression, just to keep it a buck with you. So I think you could get by with the original squeeze, but the benefit of the Squeeze Pro is you can have more opportunity. But the squeeze, to me, whether it be the OG or the Pro, and a lot of you know this, right? It's everything to me. So that's mainly what helps me identify that quote-unquote moment in time when a stock is preparing for a bigger than expected move. And I put moment in time in quotes because, for how many years now have we heard JC saying that? So I'll show you how to add those to your chart. And then in terms of the premium indicators here, first is the 10x bars. Now, I don't actually use the physical bars. I like my labels. So I got the 10x bar labels, and these just serve as my momentum gauge. So these help me gauge whether the momentum is in my favor, if I'm long or short, or if the momentum is starting to shifting against me. And then I have my stacked EMAs label. So, to me, it's all about the big 3. Right? Trend, structure, and momentum. So the stacked EMAs label, this is my structure tool. Right? If the EMAs aren't stacked positively, it's not a clean setup. So say you're looking for a daily squeeze, you're looking to go long, you find your daily squeeze, the EMAs aren't stacked positively, it's no bueno, no bueno. And I'll tell you what the EMAs, or stacked EMAs, what that actually means here in a minute. And then I like to utilize the multi-squeeze labels. So I'm a big labels guy. It keeps my charts a little bit cleaner, but I'm still getting quick insights into what I need to get insights into. So the multi-squeeze label, I'll show you what that looks like. But I can pull up a ticker and see if that stock is squeezing on a weekly, a 3-day, a daily, a 4-hour, 2-hour, 60-minute, 30-minute, 15-minute, 5-minute. And the more squeezes, the better, right? The more the merrier. And then something that we have in the works here, I'm calling the big 3 buy signals. And there's so much work to be done here. We got to, right now we have it for the daily charts. I need it for weekly, I need it for 4-hour, 2-hour, I pretty much need it for every time frame. And I also need a big 3 sell signal. Okay? But again, big 3 being trend, structure, momentum. So we're looking, and again, a lot of this is out of my control, right? But it is looking like we're going to be able to hopefully deliver this to all of you towards, the midpoint later on this year. Basically, it's a squeeze on steroids. That's what I can tell you for now. However, down in the comments, right, I do have a class coming up here at the end of January. If you would like to see the big 3 buy signals, at least the beta version, let's call it, be available as part of the class, let me know down in the comments. More comments we get if you all show interest, I might be able to pull a couple of strings. But let's get jumping in here, right? Those are the tools of the trade. Some exponential moving averages, some Keltner channels, the Squeeze Pro or the OG, 10x bars, stacked EMAs label, multi-squeeze labels, and the brand new big 3 buy signals. Let's get diving in. Alright, so here is the daily chart of Qualcomm. This is probably the best looking setup in the market right now. But don't pay attention to the pretty colors just yet. Right? So the labels up here, the squeeze. First, we got to focus on the basics. If you don't have the basics, if you don't have the foundational tools, the other stuff isn't going to be of any good. So the first thing we want to do here, right, this is kind of like the basic layout. The white line is the 21 EMA, the blue line is the 8 EMA, and then there's my 2 sets of Keltner channels. So the yellow here, that measures 1 average true range move above and below the 21 EMA. There's my second set, the purple one, that measures 2 average true range moves above and below the 21. So the first thing we need here are the exponential moving averages. So you're going to want to go to studies, you're going to want to go to add study, and then if you come on over here to moving averages, right on down here, let's see, where is she? Where are you? Moving average exponential. So you want to click on that and you want to go back and do it again. So put 2 of them on your chart, and then you're going to right click it, edit study, and there's the settings for the 21 EMA. Price close, length 21, displace 0, and I got it with a width of 5, I got it white. I'm going with the dotted style. You can spice that up however you'd like. But there's the settings for the 21 period EMA. And then for your second EMA, you're going to right click. Length should be 8. And I got my 8 EMA here as blue. So as soon as you do that, now you're going to have the 21 period EMA and the 8 period EMA basically on any time frame. All right, so you got it on your weekly. Here's the weekly 21 and the weekly 8. Now this is, to me, this is really important because the 21 EMA, it's like home base. Right? It basically serves as your foundation. All bigger than expected moves typically happen on a push off of the 21 EMA. And basically, right, that whole concept of reversion to the mean, all that means is a stock is going to make a directional move, and then it's going to pull back to its 21. Pretty much the name of the game. So you want both those moving averages here. 8 EMA, 21 EMA. Now, I do want to show you something here because Eric from Simpler, and I was talking to him about just adjustments I'm making in my game plan this year. And one of them is still focusing on daily squeezes, but structuring my exits based off of weekly moving averages. Pretty much what happens there is there has to be a bigger picture loss of structure for you to get stopped out of a trade. So I'm going to show you something here real quick. Alright, so check this out. So now you're going to see the blue kind of stair-step looking thing and the white stair-step looking thing. So that's the weekly 8 EMA and the weekly 21 EMA plotted on any time frame. So if I shift it to a 30-minute chart here, there's my weekly 8, there's my weekly 21. So I want to show you why this is important, right? Because if you look at something like a Qualcomm, right, this is kind of a, I don't want to call it a late stage trend, but it's a different trade back here where you're consolidating at the weekly 21 versus at this point, right? This is more so continuation of a move that already started. So these can be a bit more, difficult here to gauge a good exit. But again, my focus is I'm still taking daily squeezes, but I'm going to try to work a better risk reward, really waiting for a loss of weekly structure. So my exit here would be a close pretty much under the weekly 8 EMA. You lose your weekly 8 EMA, typically you're coming on into your weekly 21. So this is something Eric threw together for me. I found that really helpful. So I don't think it's available just yet, but I did want to mention that just in case you see that in any of my videos here. What's the blue stair step? What's the white stair step? Well, regardless of the time frame that I'm on, that's the weekly 8 EMA and the weekly 21 EMA. All right, up next, the Kelts. The Kelts, baby. All right, quick sip of the coffee there. So, studies. Add study. Let's see if I can do my ABCs here. A, B, C, D, E, F, H, I, J, K. All right, so there's your Keltner channels. You want to add 2 of those. Right? You need 2 sets of the Keltners here. So once you have those, right, you're going to right-click on one of them, edit study. Now here's the first thing you want to do. Down here under plots on average, we don't want to see the average. We want to see the upper band and the lower band. So on average, just unclick those 3 right there. But then for your upper band, displace of 0, factor of 1, length 21, and most importantly, average type exponential. In true range, average type simple. So in plain English, this is going to measure 1 average true range move above and below the 21 period exponential move and average. So I've got my upper +1 band is yellow. And you got show plot, show bubble, show title. And for my lower band, I've got same settings. Right? So you can follow along there. And now I got my 21 EMA, and I got 1 average true range move above and below it. Right. Repeat the steps here. On your second set of Keltner channels, right-click. Now the factor is going to be 2. Factor of 2, length of 21, price close, average type exponential, true range type simple. Once again, average. We don't want to see it, so I think I got it gray right now, so you can't really see it regardless. But you can just simply unclick that. For average band, I got the purple. For lower band, I got the purple. And again, this is just going to measure 2 average true range moves above and below your 21 period EMA. So there's your basics. Right? You've got your mean, you got the average price, you got home base, the 21 period EMA, and you got your 8 EMA as well. Then you got your Keltner channels, measuring 1 or 2 average true range moves above or below the 21 EMA. So that's kind of your structure. That's your foundation. The next thing we're going to talk about here is the squeeze. Because this is good and all, but what we're looking for is that consolidation at the 21 between +1 -1 ATR. And when there's a squeeze happening, that's when typically it's gearing up for a move into typically about 2 ATR. So you can get the pro squeeze here. It's simpler. Do I suggest it? 100%. Right? If you're a full-time trader, that's a path you're going down. This is your business. Right? So say an indicator is, and don't quote me on this, right? I haven't looked at the prices in years. Say the indicator is $500. That's a pretty small expense for what, if you approach this the right way, is going to be a 20, 30, 40, 50, 60-year career. Pretty low overhead. So is it worth it? Absolutely. If you're not at the point where you want to dedicate to the premium indicator, well, if you go to Add Study, you get this guy right here, John Carter. There's your TTM squeeze. So, yes, you can use the original version. That works just fine. And one day I aspire to have my own indicators on Thinkorswim. But the squeeze there, it's key. Right? And I'm not going to go too in-depth into the squeeze because we've done that in a handful of videos here. But I'm just trying to drive home the basics, right? I'm looking for a squeeze when a stock is trading between +1 -1 ATR. I'm looking to take my entries in a daily 21 EMA, and the squeeze is what helps me gauge whether or not we're gearing on up here for a push into about 2 ATR. Basically what you saw here from Ford. Now Ford kept going, but you catch that easy move. So those are the free indicators I use. Now, big 3, right? Trend, structure, momentum. That's where the premium indicators come into play. Okay, so you can see up here I got 2 labels. Stacked EMAs weekly, stacked EMAs daily. This is my structure tool, right? And you can go on ahead and write this down, and I'll put it in the description. What does it mean when they're stacked EMAs? And again, it sounds a little bit wacky. I ignored this for years. My results kind of suffered. So when you have positively stacked EMAs, it means that your 5-period EMA is on top of your 8-period, which is on top of your 21, which is on top of your 34, which is on top of your 55, which is on top of your 89. It sounds like a lot, right? And I'll put that in the description. It has a good backbone, right? It has a good foundation. It's solid, right? It's a big-ass tree that's not going to snap in a little bit of wind. So if you look at a daily squeeze and there's no stacked EMAs, let me see if I can find an example of something squeezing right now. Baba here. Now, the squeeze is powerful, so that might still give you the push into 2ATR. But there's no bullish structure to this, right? You're in a downtrend. So look at all these daily squeezes, all of which took place with no stacked EMAs. They tend to fire to the downside. So if I'm looking to get long, there has to be positively stacked EMAs. And what I've found, and what I continue to find, is I need them on both the daily chart and the weekly chart. So even if you look at something like an MP, right? Even though my major focus here is the daily squeeze, and where am I taking my entry? Right there to 21 EMA. What am I looking for? A push into 2+ ATR, right? The basics. The basics. But even though we have positively stacked EMAs here on the daily chart, what I've found is you want the same thing on your weekly chart. You want your weekly chart to have that same structure, right? That same firm foundation. So part of my rules are, even if I'm looking to trade a daily squeeze, I need positively stacked EMAs on both the weekly and the daily. So having those labels up here, it's super simple. Just trying to think of some stocks right now. Microsoft. I'm not going to trade it. It's that simple, right? If we're looking for a long position in both time frames, the weekly and the daily don't have stacked EMAs, I'm not going to trade it. So all of these tools here, the whole point is I'm looking for one thing. So when I pull up a chart and I run my scans, it should take like 1/10 of a second with a quick glance here at these tools to gauge, okay, this is a opportunity or I'm going to ignore this kind of shit, right? So let's see. Google. You know I love Google. Not going to trade it. AutoZone. I'll trade it. MP. I can trade that. Lucid Motors. I'm going to trade that. Apple. Okay, I can consider Apple. How about Nvidia? Not going to consider it. Now, could Nvidia explode next week? Of course. I'm just trying to make sure that my next 100 trades are all working a high probability. So if those next 100 trades are going to be long positions, do they work every time? Well, I took a loss last week in Dollar Tree. But I'm going to take that trade every single time it comes across my radar, as long as we have a squeeze, stacked EMAs on both time frames. Doesn't mean it works every time. But it worked on Ford. It worked on Apple multiple times. It even worked on DWAC. So you're working a numbers game there. So to me, the stacked EMAs label, it's just a really, really nice tool. And it's a good gauge of the indexes. So your S&P is not bearish, it's a little bit sloppy. Your Dow Jones here, well, check this out. The EMAs are actually stacked negatively. That's not good. That's bearish. So that's my structure tool. Super, super helpful. Super, super simple, but I would not trade without it. Next up here is the 10x bars. Momentum reading. And, I'm a pretty colors guy, right? Show me the pretty colors. I'm going to keep it nice and simple. So say I'm looking for a long position. I want it to have all the characteristics here of MP, right? Trend, structure, momentum. So if we have a daily squeeze, if we're trading near the buy zone, if there's positively stacked EMAs, the only thing missing at this point here is just trying to get a good gauge of whether or not momentum is working in my favor. You can use the histogram. The histogram is helpful. This is where I really like the 10x labels. And this tool is pretty simple, right? Pretty colors. If the 10x labels are green, it means there's a presence of bullish momentum, right? Or better said, bullish momentum is increasing. Now, if they are yellow, right? Let's see if we can find some yellow 10x bars here. CERN is pretty good. I'm just trying to think. What could be yellow right now? Nope, Apple is still green. Let's check the S&P. There you go. So this just tells me right away, weekly and daily chart, momentum is neutral. Right? So you're not gaining bullish momentum. You're probably losing some bullish momentum. Right? But it's a little bit neutral. So that to me kind of points towards, all right, we're going to be a little bit more choppy here. If I'm getting long the S&P 500 right now, and we don't have stacked EMAs, and the 10x bars are neutral, it's probably not going to be the highest probability trade to the upside. I don't really have structure or momentum working in my favor. If I look at something again like BABA here, okay, well the daily chart is trying to gain momentum, but there's still bearish momentum on the weekly chart. It's not going to make for a clean long position. If I look at Boeing here, stacked EMAs, it's a little bit neutral. But if I look at Qualcomm, okay, so my weekly and my daily charts have bullish structure, and my weekly and my daily charts both have bullish momentum. And there's a squeeze. We're probably working with something here, right? So what I like to do, over to the left on my Thinkorswim under the watch list, is I have the 10x labels for basically every time frame. Weekly all the way down to a 5-minute. And when I'm swing trading, I'm really focusing on a weekly down to a 60-minute. So again, Qualcomm here, it's got the momentum I'm looking for, if I'm looking for a long position. How about Microsoft? No way. Bearish momentum across the weekly down to the 30-minute. Simple stuff, but powerful stuff. And again, the whole point for me is I'm not trying to think. So I don't want to have an opinion on Microsoft outside of, is it my pitch? Does it have my structure? Does it have my momentum? I don't want to think. So is Microsoft a candidate for a long position? No. Is Qualcomm? Yes. Is MP? That's solid. How about Lucid? Yeah, Lucid's shaping up pretty good here. So there's the 10x labels. Now, also to the left of the screen here, which you can't see, is the multi-squeeze tool. So I got a little chart over here. I'll pull that over. And this is the multi-squeeze label. So I'll pull the other one over as well, right? Just so you can get a full sense of what I'm looking at. Let me see. Right, so to the left under my watch list, I've got both of these screens right here. So there's momentum, right? 10x bars from a weekly chart down to a 5-minute. And this is the multi-squeeze label. So this tells me whether or not we're squeezing on a weekly chart all the way down to a 5-minute. If it's white, there's no squeeze. If it's green, there's a squeeze. So look at it Lucid here. We can see our bigger time frames have bullish momentum. Everything else is a bit more consolidation, which makes sense because we're squeezing in a lot of different places. We're squeezing on a 3-day, a daily, a 2-hour, 30-minute, a 15-minute, a 5-minute. Right. So there's a whole bunch of moments in time. We can see momentum is starting to turn bullish. And then with the stacked EMAs label, we can see, okay, we have structure. All those tools coming together for one purpose. I'm trying to find that moment in time where that stock is getting ready to make a bigger than expected move. So do we have a squeeze? Well, you got it everywhere. How's momentum? It's turning bullish. How's structure? Weekly and daily stacked EMAs. So let's run through a few of them here. Again, Microsoft. Is there a squeeze? Well, there's a 3-day squeeze, and that's kind of it. Well, okay. How's structure? Well, your weekly chart still has stacked EMAs, but the daily chart lost them. How's momentum? Pretty much bearish from top to bottom. Does that have the characteristics of something we want to get long? Not so much. How about MP? Is there a squeeze? There's a lot of them. Weekly, 3-day, daily, 4-hour. How's momentum? Come on. How's momentum? Here we go. Generally pretty bullish. How's structure? Very nice. Weekly, daily, stacked EMAs. So hopefully you can see how all these come together, right? I'm not using different indicators for different trades. I'm using the same handful of indicators for every single trade. Now the last thing I want to show you here and give you a sneak peek of are those big 3 buy signals. Okay, so with these big 3 buy signals, and again there's a lot of work to be done here, I need them pretty much on every time frame, and I'm going to need some big three sell signals, right? But big three being trend, structure, momentum. So the thing about a daily squeeze is, or any squeeze, they're not all created equal. So I wish it was as simple as, hey, let's wake up, let's run a scan, and let's get, a position in anything that has a squeeze. Well, Facebook has a daily squeeze here, but this thing's a freaking mess. It's under the 21. There's negatively stacked EMAs. Let's do our quick momentum check here. And I don't think it's going to be pretty. Well, momentum check isn't pretty. And how are we doing for squeezes here? Oh, well, you got squeezes basically everywhere. So it's interesting from that perspective, but there's just no structure, right? There's no edge here. So what I'm looking for with these big three buy signals, and I got a scan going for this right now, is I'm looking for the ultimate squeeze, right? With a mix of everything that we discussed here today and a few other things, I'm just trying to differentiate between a squeeze and let's call it a super squeeze. Okay. So if you look at Qualcomm here, this is so important, especially during volatile markets, because if you have the white arrow, it's an early buy signal. I love the build positions of early buy signals. It's basically telling you, and mind you, right, this is a tool that tries to communicate. So if the buy signal's been trying to communicate since early November, Qualcomm's got it going on. It's got the trend, structure, momentum characteristics of something that's going to continue to trade higher. Now go on ahead and find your entry. So if you have a white arrow, it's an early buy signal. If you have the green arrow, it basically says it's go time. Now, doesn't always mean the stock explodes immediately, but the point being here, it's been a volatile market, right? There's been a lot of chop, there's been a lot of nastiness, and I think a lot of us have biases towards our favorite stocks. Well, if I look at Microsoft here, is Microsoft trying to communicate anything to me with that buy signal? It's speechless right now. It's got nothing to say. So this doesn't have the best combination of the big three in terms of a long position. Qualcomm's been trying to squeal over here for the last 2 months, basically. You might want to pay attention. If anything, these are great for selling put credit spreads. So that's my new tool I'm working on here. If I look at MP, okay, so it flushes the other day. It flushes over here. It flushes here. It flushes there. They're all good buying opportunities. Right? Do we have stacked EMAs? We got them everywhere. We have momentum. And then you get the buy signal saying, hey, you might want to consider getting long. It's got the ultimate combination of everything you're looking for, plus a few other goodies. So if we're going to have a discussion of buying the dip, that's the dip we want to buy. More importantly, I'm getting long MP over here. Didn't quite get a move into my target, but am I getting shaken out on that flush? No. As long as I'm getting buy signals, I'm hanging on tight because it's still a beautiful setup. Check out Dollar Tree. And again, hey, do buy signals work every time? Of course not. Just trying to work the numbers game here. But this starts to pull back on us. And guess what? We start to lose our buy signals. So that break of the 50, we're getting the heck out of there. So that's what we're working on. And again, there's a lot of work to be done. We need multiple time frames. We need sell signals. And I'm pretty sure we're aiming to do that launch, Q2 or Q3. But again, let me know in the comments, at least the beta version here for the daily charts. If you would like to see that as a bonus included in my upcoming class, let me know down in the comments. I'll see what strings I can pull. We'll see what can be done there. But hey guys, I hope you all found this helpful. Again, you kind of need your basics here. All right, and I want to show you a recent trade and forward just to kind of tie everything together, right? So the first thing that's happening here is it's coming across my radar super, super early. Now, I've got an issue with biases. I like Amazon's, I like Google's. If I'm paying attention to forward, I'm getting long back here in October because the buy signal is telling me to. Guess what? I haven't had a buy signal on Amazon in like a year. So, I got all my buy signals telling me forward's ready to explode. But more importantly, the basics here, there's a squeeze. We're trading between +1, -1. We had stacked EMAs on the weekly and the daily. We had bullish momentum on the weekly and the daily. it doesn't mean the trade's going to work in your favor, but when all those things come together, that's when you found the stock gearing up for a potentially bigger than expected move. And generally speaking, that's pretty much all I'm trying to catch. To the upside in a bullish market, to the downside in a bearish market. And then that multi-squeeze tool, guess what? If you're paying attention to squeezes on multiple time frames, you're probably catching forward back here when you had a weekly, a 3-day, and a daily squeeze. So to coincide with the buy signals, I got a scan. It's basically going to help me stop missing moves like this. But with all that being said, I hope y'all found this helpful. You can, of course, check us out at simplertrading.com. A lot of these indicators are available on the website, like the Squeeze Pro, the multi-squeeze, the 10x bars. But again, let me know down in the comments if you're interested in trying to get a beta version of that daily Big 3 buy signal out a little bit earlier. But with all that being said, I hope you found this helpful. If you haven't already, do me a big favor. Go on ahead and subscribe. We're almost at 10,000 traders. 10,000 traders. Well, I assume you're all traders. But we're almost at 10,000 subscribers, which is awesome. But go ahead, hit the like button, hit subscribe. Helps with the algorithms here in this beast known as YouTube. But more importantly, it gets the videos out to more traders, and that's the goal. Helping more of y'all. But with that being said, enjoy the rest of your day. I'll see you tomorrow for the weekly watch list video. Until then, be good.